Hello, everybody, and welcome to another Monday Open. Thank you so much for joining us, and I'm hoping you're looking forward to a very interesting week. Has everyone had a good weekend? It's a short week this week, theoretically, going into Easter, so I hope everyone's bought up their chocolate treats and they're getting ready for a hopefully well-deserved long weekend if you're celebrating that one. Otherwise, we've got, of course, markets to talk about. So we have a whole bunch of big news articles coming out. We obviously have a lot to discuss from the technical side. As per usual, we'll be covering everything to do with stock markets, commodity markets, including, of course, oil. And then we'll be going into some crypto discussion as well, because I think crypto is at a very pivotal point. We'll talk about that a little bit later on. So we obviously saw over the weekends, well, maybe not so much of a surprise, this, of course, Saudi oil production move. And it's led to a pretty big move in the oil markets. So we'll just quickly jump on over to the oil markets at super critical zones. On the weekend video, well, we talked about two. We talked about how we thought it was probably going towards 77 or 80. And it just, of course, shredded that like butter this morning. And we'll go down to the smaller time frames just so we can understand how big this move was. There's the initial price spike. So unfortunately, if you're short oil, that's pretty much what happened. And it was just instantaneous, bang, straight through. And there's nothing you could do about that price. It just hit you on the open. So first ticker all the way up. Unfortunately, that is sometimes the risks of holding things over weekends. Now, what do I think about it? Well, we're seeing a lot of upgrades. So if we actually go, there's a whole bunch of news stories we're going to talk about, but I noticed over here, especially Goldman Sachs have upped their expectations for Brent to 95 a barrel by the end of the year. Now, I'm not too sure about this. Remember, yes, we're getting a cut, but at the same time, we're going into demand destruction. And I think you'll find that we're probably going to see, if we do see unemployment go up, and we will be talking about, well, actually, it's up to the chat. The chat can decide. Would you like me to talk about my real thoughts here coming through the next 6 months? If you don't, and you want to just get into the technicals, you say technicals. And if you want me to just rabbit on for about 10 minutes here about my thoughts, because I've kind of done some extra thought process on this, then we'll do that. You guys decide in the chat. I'll read it in a second. So, of course, we've got unemployment most likely that's going to rise. Now, if we do see that, which we suspect because the Federal Reserve are engineering such a thing, then I just don't see how demand destruction won't be a thing moving forward. And this is trying to sap out each and every last dollar to try to kind of like hold that price back from going underneath 65 a barrel. Obviously, that would be a disaster. 95 Brent, well, Brent's always going to trade at a higher premium. So if you ever want to see Brent, you just put in UK oil. That'll give you the Brent code. And you'll see it's not really a Nostra kind of pick here because it's already at 84. And that's the spot. The price in the futures is sitting somewhere already in here kind of anyway. So it's not really a spectacular pick. Now, do I think it's going to happen? I doubt it. Most of the time when this occurs, it ends up wavering down. I'd say it's a jump to get money quickly, like a cash grab, and then it will end up picking down. All right, let's see what everybody says here. Thoughts? It seems to be winning over technicals. Well, we can do both. Yeah, of course we will. All right, we'll start off with the first thing, and I want to bring some of the stuff from the weekend into it. So, I want to discuss a couple of topics here. We'll start off with the idea of whether we're following the general curve of what we expect to be following around a Federal Reserve pivot. So we need to remember there's a couple of things that we want to always see, and that is that the market isn't doing what it's meant to be doing. Now, you might think, well, wait a second, I want to see it doing exactly what it's meant to be doing. Well, it depends on timing. So remember, when the Fed is about to pivot, which we pretty much know that's going to occur. One or two hikes more, unlikely, maybe one. Even then, they're going to hold. So are they going to, and I'll let the chat understand this. What do you think, chat? Do you think they're going to cut very quickly, or do you think they're most likely going to cut and then sit? So is it sit, so cut, sit, or cut? Which one do you think they're going to do? If I was the Federal Reserve or I was any central bank, being Europe, any of these, what are we going to do? We're most likely, I believe, and we'll see if we can catch up here, We're going to cut maybe once, but they're going to, very, very, very likely not sit. They will sit, and the market is expecting cut, 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 cut. Now, we know this, and I don't have it up, but someone can send it to me if you want. If you ever look up the Federal Reserve's dot plot is literally telling us exactly what they're saying. So go and look up the Fed dot plot after this. And what you'll notice is that they don't actually have a cut for all of 2023 and most of 2024. In fact, one of the people is crazy and they think they should be sitting at 5.5% at 2024. So the Fed's dot plot and the bond market don't agree. And I think this comes back to one word, and I want to mention this word: credibility. Does the Fed have any credibility at the moment? Probably spelled that wrong, but anyway. Do we have any cred? Does the Fed have cred? Well, arguably, it lost some of its cred when it claimed that inflation was transitory. And of course, it wasn't. So now they're going to very much have to stick to the signs of what they've been saying, because otherwise no one's going to believe them ever again. And I think this is a big component. They're going to have to say, we will do whatever it takes to beat inflation. And that's still their mandate. That's what they have to do. Does the Fed really care about a US recession? Maybe not. I don't think they do. In fact, I think their main thing is we have to get rid of the inflation because it is deadly to the economy long term. And therefore, they will most likely sit, and they've on average sat for 6 months. The market doesn't expect this, remember. The market is expecting cuts. So if this ends up happening and they average sit there for quite a while, that's going to be a problem. If they cut once, the markets would just sugar rush, but then they have to sit again because they have to wait. So I think there's more likely than not we have a higher interest rate for a while here. Okay, that's the first thought I want to go through. Now, the bonds market, in terms of inflation yields, so in terms of what we've got, going on with rate hikes, it's showing us that in terms of all the inversions across the board, we're still heavily inverted. Now, remember, we usually never enter a recession until the US 2-year and US 3-month usually come underneath inversion again, okay? Underneath that magical 1%. We also haven't seen unemployment go up, so therefore we're still at least 3 to 6 months off any kind of recession being called, at least based on stats. These are all thought processes. So at the moment, the market's following. So you might say, well, okay, what does this mean for the market? Well, the market's basically done this. We're trading here. So we're in line with a no recession, perfect soft landing. Druckenmiller, one of my favorites, he's said this a few times, okay? And he's said that we've never gone into a soft landing when US core inflation has gone past 4.5%. I think it was maybe 5%. Well, it doesn't matter. We're past that anyway. So we've never had a soft landing. We know that when the Fed raises rates every time since, and remember this word, basically my belief is that there are 3 main growth engines in basically the world right now. And we'll talk about the Western world from this one. Debt, okay? Population increasing. And the last one is going to be, I believe, AI efficiencies. And this is probably the greatest strength potentially for the West moving forward, is the ability to potentially harness AI. Okay, that is actually a big strength. So I think that's going to grow a lot. And we know that stocks are thinking that. But regardless, we always thought that eventually AI was going to take over Amazon, and maybe Amazon becomes the Terminator. Who knows? But effectively, that's what we're like. We've got debt, population, AI. It's pretty simple. We want to simplify our things. So we know that the Fed's never combated inflation without pushing rates. So this is the normal interest rate above the inflation number. We haven't even seen that kind of switch yet on year. So the core number has to be underneath the Fed rate. They know that. They're going to have to hold it there. So the markets are kind of telling us many things here. We've got our growth engines. They've shored up the debt by securing the banks. But do they really care about a company that borrowed money? So let's think about it. A zombie business that's borrowing money. Do they really want to continue to support that in this current environment? So there's a business that doesn't make any money, that's done nothing, like that basically is losing quarter on quarter on quarter on quarter on quarter. Are they prepared to let some of those fall and therefore people get fired and therefore unemployment to rise, okay, so if we get unemployment to rise, then that will automatically put us into potentially a recession. And that's where they have to get to, don't they? Because they have to stop the inflation and stop it coming back, more importantly. Otherwise, you've got to do another rate hike cycle and it's deadly. So I think this is a big, big thing in terms of what's going to happen. We're following this track right now. We know that the Fed has always pivoted. And when they pivot, they tend to hold. The market believes they're going to cut. So we have to say, well, that's probably unlikely because the Fed wants their cred. Okay. So they want cred. They don't want this inflation coming back. You got to hold the cred. They're probably prepared to let some of the zombie market companies die. These are little businesses and fintech startups and all sorts of things like that, as long as they can secure the deposits. Okay. And that will cause us into some kind of recession. So we have to think that the bonds market's probably correct here. Because remember, the bonds market actually believes with inversion, especially when you get 50% of all yield inversions out there, that we are most likely in a recession coming forward for the US and most likely for Europe. And I would say the odds are still heavily stacked in that concept. So we're not following that. You might say, well, wait a second, the markets aren't following this. The thing about stock markets is they don't really trade necessarily on fair valuations all the time. They trade on fear and they trade often on greed. And I say this to many people in my group mentoring sessions. I talk about fear and greed being the premises of stock markets. Does anyone agree with that? I mean, if you think about it, think back to January. Think about the FOMO, the glorious FOMO you felt. And then as soon as you felt that FOMO, bang, smashes the market 6-7%. Suddenly every bank in the world was dead and everything was dying. And suddenly Silicon Valley just magically killed Credit Suisse. You know, it's all engineered. And the thing is that there's so many things that were said, like even when the person, I think one of the Saudi people said that they weren't going to give money to Credit Suisse, I think they'd already said that 2 or 3 times before. So there's clearly a disconnect here, I think, between what the markets are doing, which is sucking people in, getting greedy, and the fear that the bonds market think. So we'll get off this screen for a second, and I just want to bring up all the pivots. Now, I'm not saying that's 50% down and everything's horrible. Maybe only like this, maybe even less than that. But it tends to be that before these pivots and when the pivots are happening, look at the increases before the pivots. We haven't even pivoted yet. We don't even know there's a Fed pivot. And look at these increases. Every time we get these increases generally, or these spikes just before the pivot, even here, not that you can see it, and this is a damn blurry image, but you can actually see there's an increase here and then a pivot. And there's an increase here and then a pivot. And there's an increase here and then a pivot. So does that mean that we're actually following exactly the plan, but no one's quite understanding it? What do you think? Is that what we think here? So I think that's a big one. CLF says, how can it short-term be driven by fear and greed, but long-term be driven by earnings? Well, that depends what you mean by long-term. Did we really see a miraculous recovery in the economy over the last 12, 14 years? A lot of it's driven by the Fed balance sheet, which trickles into assets. And I think that's a big component of it. The Fed basically is the asset sheet of the market at the moment, especially in growth side. So if you take out, like, let's say the top 10 or 15 businesses, it really does show you the true economy. And it's not as good as you think, unfortunately. So we get these sugar spikes before basically these pivots. Now, a lot of people are asking here, why is that happening? Well, I think it's simple, and probably it's people trying to drop the bag to others. I mean, maybe also it's some type of stimulus that comes in that makes it look like it's all going to be okay, and then something it isn't, because real earnings come out. So I would suspect that the most likely thing that actually takes the market down, if this is going to happen, okay, this is my thought process, if this is going to happen, would be earnings. Now, I'm not saying it's necessarily even these earnings, but I think you will see compression. And that's because it's engineered by the Fed. The Fed are literally engineering unemployment to go up, zombie companies to potentially die. Something between like 8% and maybe 12 to 14% of big stocks on markets don't even earn enough money to pay their own interest at current levels. That's pretty disturbing. So it's somewhere between 8 and maybe 14% don't earn enough money to actually pay their own interest bills. And therefore, they have to go raise again. Now, in a credit crunching society we're currently now facing, potentially that's going to be a big issue. So, of course, that's the doomsday prepping concept. Am I thinking that it's the end for the US? No. Am I thinking it's the end for Europe? No. Am I thinking it's the end for everybody? No, it's not. I'm just saying it's a very distinct possibility of what could be happening right now. And the fact is, we've seen this before. Brian McGinnity says here, consumer credit has dried up, earnings will be hit. Banks are not being kind of like, they're not going to be as excited about doing it. And here's the chart that I shared. I don't know if enough people are really paying attention to this. It's a pretty big concept. We already knew that lagging Fed hike impacts would be felt through the economy. But what we've seen recently with this Credit Suisse, this Silicon Valley Bank, this other stuff is an increased lag. Well, so the lag has already been there, but now we're seeing tighter credit conditions. And I think those two combined will hit the economy, but they're always lagged. So you can't see it yet. We haven't seen it in anything. And remember, the one thing about everybody out there, whether it's your family, whether it's your friends, whether it's everybody else, is how fast can that sentiment switch? And I want everyone in the chat, what do you think? How fast can the sentiment switch? We've got 1,200 people there. I've watched it over the years, and I'm always surprised how fast sentiments switch. I always think about it in crypto terms. 1 minute, crypto's the best, crypto's the best. Oh, yes, we're going to get Bitcoin. We're going to buy Bitcoin. We're going to buy everything. Shiba Inu's the best, and we're going to buy dogs, and we're going to buy this and that. And then 2 weeks later, oh, it's crap. I knew it was fake. I knew it was fake, guys. I told him it was fake. And then that person probably put about $500,000 in it or something. But you know what I'm saying? Like, it switches so quickly. And then now it's real again. It's going against everything. And, you know, it's taking it to the man. It's showing the banks that, you know, they suck and everything else. And then 2 weeks later, it falls 50%. Oh, it's crap again. So you can tell how fast things switch. And I think that's one of the things that's interesting about everything in the economy. If you take away any kind, and this is why cred's so important for the Fed as well. If you take away the stability of the system, if the Fed didn't come in 2 weeks ago, 3 weeks ago and say, we guarantee all the money, don't worry about 250K, we guarantee it all. Can you imagine where we'd be right now? But that one quick switch brings back confidence, which is obviously very important. So, yeah. Narrative follows price, period. Yeah, well, narrative, yeah. I mean, but this is the thing. So I think this is a big component here. Alvarez Proco says, any thoughts on China and Russia and other BRICS nations teaming up and overthrow US petrodollar? Look, if you don't realize that we are in a kangaroo market, that's right, John. If you don't realize that we're in some kind of currency, like look at Dalio's concept of the world-changing order. It's absolutely true. But these are the things that I think face the markets. I mean, it's very likely we're in a currency war, and BRICS is going to become, if you don't know what BRICS is, go look it up because it's going to become a big thing. I mean, it's a massive thing. SWIFT versus BRICS. Let's face it. It is what it is, and it's what's happening. This doesn't mean you're involved in it. It just means what it is. So if we go over here to EPS, we know this is going down. So, of course, we know that's already switched to zero. I keep bringing it up for a reason. And we know that also Morgan Stanley's Mike Wilson brings up equity risk. You know, this is a thing where people are not considering it. So let's go back over to the stories here because it all ties in together. So basically, you're now starting to see arguments here from big banks that go both ways. 2 weeks ago, it was great to buy equities. Now it's great to buy cash and own other things. I think a lot of pension funds are going to move back into bonds in a way that they haven't, and cash that they haven't moved for years. And you're going to see, look, there are a lot of aged annuities, which are basically these funds where they set them up to guarantee certain amounts, okay? And those certain amounts, they were literally losing cash for years. They're going to say, oh, I'm going to take this opportunity and quickly go and guarantee this money back so that I don't have to go through a decade like they did, especially in the UK with the pension funds, where they actually couldn't even afford to pay them out. It was so wild. So anyway, what do they claim here is the best? I don't even know. But yeah, I'm assuming they're going into other things and claiming stuff. You can go read it yourself if you're interested. It's on Market Watch. But the point is that we're now seeing this. Wait a second, what's our risk-free rate? That's a word again, risk-free rate. So Tesla, of course, delivered nearly 423,000 vehicles in the first quarter. Demand appears very solid after they did the cuts, which we knew they had to do to keep the numbers up. The market doesn't seem to be liking that into the open. We'll talk about it more later. But yeah, so my general consensus to bring it all back is that we are following this at the moment, even though no one's talking about it, which is good because you want less people talking about it. We are literally following a sugar into a pivot, which we know is most likely coming. Look at the US 2-year versus federal funds rate. Talked about it on the channel. So if that means that's happening, how much lower or how low should stocks even go? Did they already price in a lot of this? Yes, they probably did. So I don't think my call would ever be lower than 3,200 to 3,000 for the SPY. Could I see the S&P down there? Yes, if we take bad earnings. And I actually think we still get through whatever this, if the bonds market's correct, which I have to go with, it probably is, and that the Fed will want to keep credit and continue to taper, then we're probably moving towards a US recession in the future. So I still think kangaroo market, and why I wanted to say all this is because I don't think we should feel FOMO. And I could be wrong, of course. I'm not going to say I'm the soothsayer of sooths. I don't know, but I think it is valid to think so. And again, one thing I share over here on Twitter, if you want to follow at FX Evolution, click the Linktree link. We're seeing the tapering of the federal balance sheet plus other things. This kind of custom indicator I have here, and this is showing that we're seeing a decline again on the Fed balance sheet. So basically, we're seeing across the board central bank liquidity getting sucked back out of the system after being injected. And that's designed, in my opinion, to stabilize. And you can already tell that the market, what they were doing. They literally sat there all last year, moving from lows to highs, just basically stabilizing the market. No wonder we're in kangaroo. How could we not be in kangaroo when you do something like that? It's ridiculous. So it's still very manipulated in the back by this. And you just have to believe that. It's a big thing. So anyway, we'll see. What do you guys think? Do you agree? Do you disagree? Do you have any big comments you want to make? If you want to make them again, you can type them in the chat and I'll read them now. So yeah, that's a big component. Now, when do I think all of this stuff happens? I think it's going to be very interesting next 3 to 6 months because you can make super bull cases right now based on some serious stats that have generally brought the market into bullishness. Things like divergences, big. This one's very noticeable though, which is the bonds market versus the VIX versus the stock market. They totally disagree with each other. That's not usually a good sign. We've seen that in plenty of times. And I think most notably, we've seen it around here, which was partway through a recession in the US, and here, or at least a tech bust, which was the beginning of 2008, and here, which was, of course, the beginning of the kangaroo market, or around the kangaroo market, where we went into a bunch of taper from the central banks. And even here, we ended up lower a little while later. So most of these reads are leading into kind of kangaroo sideways, lack of returns. And I don't think, unfortunately, we're going into another decade of exceptional returns. So because you guys are looking at being traders, being investors, I really do feel like we're moving into a 5 to 6% on average return once we get through this weird kangaroo stuff per year out of these markets, unless the central balance sheets go absolutely wild. If that happens, well, completely changes. So let's see some comments here while we bring that up. We'll bring a chart on. So we'll bring on the US 500 so we can get a bit of an idea here of some thought processes as we approach some critical zones, which I'll talk about soon. All right, let's see what people think here. Giles says, OPEC threw a wrench in my trading plans. Yeah, they are nasty. But they do it all the time. They love doing this. Don't know where to short anymore. Should we short now? Thought 41.40-ish was my target to short. Oh, you're talking about the stock market. I don't think that should affect your S&P 500 trade too much. But yeah, if you were in oil short, for sure. Rob C says, hi, Tom. Good to catch you. Good to see you here, Rob. Great analysis. Thank you very much. 100% agree. June to August. Okay. Resistance becoming support on a Fed balance sheet. Yeah, that's true. That's wild. Yeah. That balance sheet is crazy. Adrian says, you're a legend. Thanks for the analysis. No worries, Adrian. Appreciate that. Great discussion. Inflation will fall rapidly. Yes. Okay. So that's a great point, David. Inflation will fall rapidly. The Fed will cut fast, but jobs will remain strong. Good for stocks. Okay. So I agree with you that the inflation will fall. But generally, when inflation falls, it's never fell. Everyone assumes it falls like this. I don't think that's ever really happened. In fact, I think what ends up happening is you go like this and then you go like that. So you tend to spike somewhere through it, back up. Now, that's tends to be there. I don't have a chart on me right now, but you do tend to see that. So then it says here, the Fed will cut fast. So if the Fed cut fast, then yes, my thesis is dead, David, because at that point, the Fed basically, in my opinion, I think they've done a terrible thing. But if you're going to put the pain train on, you got to stick with the pain train. But I'm not running the Fed. I don't know. If they choose to cut fast, then I think that will just bring back many asset bubbles and many problems. So what will happen is, as you said, stocks will increase at a massive rate, and then they will probably have to go and raise rates again after that, creating like a kind of double dip problem for the economy. And look, I'm not an economic forecaster, nor do I usually get into this stuff as much, but yeah, I think that'd be big. Trust says, I'm still more profitable in this market going short. The rallies don't make any sense. The rallies are designed around how many people trying to be short. There's so many people trying to be short here. So that's a big point. Rory, you've got to start looking at your sectors, man. That'd be the answer there in terms of doing that one. I'll leave you at that. And then we go here. Fake FOMO market rallies make shorting safer. Yes, as long as you don't get caught in the wrong end here. And Zolfi says, if the market crunches down to between 3,000 and 3,500 and the S&P 500 PE ratio forward estimate is favorable and I wanted to buy the index, which instrument do I use? I'm not going to tell you that because that would probably be considered something good, as in some advice. But you could, of course, use an ETF if you wish to, because Warren Buffett says so. Not because I say so, but you have to think about what an ETF does not mean safe. I really want to mention that. I know that's boring to a lot of you, but please look up the ETF fact sheets, okay? Please look up the ETF fact sheet, something like that, yeah? Because what that will tell you is actually show you their holdings underneath. Exchange-traded funds are transparent, and they'll show you what they hold, but a classic case was Boyle recently. Everyone's buying Boyle. It's futures contracts. Do you know that it's futures contracts? You've got to be careful there. That's a big thing. No worries, Carl. Thanks for all your hard work, man. You are one of the most level YouTubers out there, and you've helped me tremendously. I appreciate that. I hope have our work over the last couple of years, especially the last 6 to 12 months, has that helped you out there? Let us know. I'm always interested to know whether it has. Some of you are probably going to say, no, kind of. And some of you are going to say yes, but I do try to give away quite a lot of helpful information. We've got here, Quill, our $10. Health is wealth. Thank you very much, Quill. That is very true. That's probably the best type of wealth overall, for sure. All right. Why is odd up so much in RBA meeting? I didn't actually look at the RBA meeting, but I assume they said we're not going to do anything. Who knows? They usually say we're not going to do anything. They rely on the US too much. So let's have a look here at the US 500. So we saw a little bit of a sell-off here. We obviously finished Friday incredibly bullish. I mean, it was just like booms out with the dynamite. Now, that hit through quite a lot of levels. So we obviously cleaned up a gap that was sitting here at 40.90. We had a bit of intersection with that point, but we saw nothing. Like you go down to a 10-minute chart, have a look at this. 40.90 gets hit, which is the gap fill. And look at that, just like a little blip. So what this shows you is if you're really going to short markets, you either need to use options and have time on them, or you need to wait for some kind of confirmation. And, the sad thing is through this entire rally, we haven't actually had any bearish sell-offs that have shown us a turn. So, that's not sad because it makes sense why we're up here. This is quite an aggressive move. And I think it coincides with so many levels that I put in the videos. So let's talk about the levels here. Thank you again, Quillal. So we've got here the QQQ, which hit onto a weekly or big high over here. We've got, of course, a gap fill. Now, if markets do find another rally in them today, let's just say that does happen, and we fill into this gap, I would say this is a tremendous area to be watching for reactions. If you were long this market, it's certainly a critical point across multiple indices, because this is like, I mean, the real critical point. This is the real one, because the Qs are hitting on the highs. The US 100, obviously, you can see here where the futures went to, right in that high there. And then we've got the US 2000. Where's the US 2000? Here it is, which is sitting right around that 1800. So this is basically right around where we saw all of this consolidation start. Now, we love this low take. Of course, that gave us solidification that we should have moved up. We could have sold midway, which is here. We ended up going to the top, but this is why it's so critical. So many stocks at these zones. And Tesla was just one of them. I mean, if you look over here at Tesla, it broke through the 61.8 and then it just went ballistic. I mean, that's a big day. And it came straight into basically a double hit level that I could see find some resistance. Of course, we've now seen this this news coming out, and that's pushed it back down. So that's going to be around where buyers are going to like it this morning, because I think it was trading at 199 before. That was sub 200. That's where, buy the dip kind of people are going to try to pick it up. So it does make it very tough, because, well, Tesla's sitting at kind of a buy kind of zone, although it's not filled all the gaps. It's sitting around there. And then you've got so many stocks that have just spiked highs. So I wanted to bring up a list, and I'll bring this list over here. That's excellent to hear that you've done well there, sir. Seems counterintuitive that equities are up, banking crisis over, jobs data strong, and people expect inflation to drop. If anything, we are in the perfect environment for inflation to remain sticky. Yeah, pretty much, because you need kind of a little bit of confidence degradation there, and that's the thing. And look, markets are at full neutral. So I wanted to look at some of these biggest stocks here that have got the big returns. This is again from Twitter. I thought we'd just have a quick look through some of these winners, because we've got things like AMD, Meta, Nvidia. So many powerful stocks. So let's have a look at. We'll start off here with AMD. Oh, I'll go to Intel, I guess, because Intel's the biggest. So Intel's got an amazing accumulation on it. I always suggest, look, this is the one you want to go study. If you want to study perfection, it's very close to the way that you want to see bottom lows. We mentioned it a few weeks ago. It's just powered since then. And I mean, it's powered. Anyone that watches this stream on Mondays would know that this was my weird pick from about 4 weeks ago or whatever it was. But it's done 32%. It's a big breakout, but it's probably pretty obvious, and a lot of people are talking about it, got upgrades, etc. I wouldn't be surprised to see it show a little bit of weakness. Now, this is not my preface. I actually think this thing's still pretty good. But if we look over at AMD, look where it is. So don't worry about these expected weekly options highs. That's from a few weeks ago, from quite a while ago. But this hit a critical level. So we reached into this high, and we basically hit that last week. Then we found some sell-off, and now we're consolidating. So if we go down to something like a 2-hour chart, you'll see where we are. We could be in accumulation, or we could be in distribution. We don't know yet. But that's tick one to kind of something that's at critical or around a very big zone. And this is what we found a little while ago. One of my favorites, Microsoft. I always like Microsoft, so I'm obviously always going to say it's pretty damn good. But it's filled some of the gaps that had left behind by this island reversal. Now, we don't have signs of weakness yet. We really don't, because we don't have things like we had last time, where we had island reversals, or an island reversal here. You can see they actually happen quite a lot. Island reversals are pretty boss, along with the rest of your analysis. But we've got a lot of breakouts or things hitting into critical resistances. And I think this is key, because the Qs are as well. And when you have so many of these stocks, including Meta, so we'll load Meta up. Meta here. Meta's kind of actually not really on a high yet. We've got a lot kind of approaching it. Now, if some of these stocks like this one here did that, and then they sold off that zone there, and let's say we find a rally today, and then we end up selling later, this is a very, very key level. And even right now where it is, anything in here is super dangerous for NVIDIA. We've talked for weeks about the potential for it to be short. I've generally remained, well, there's no signs yet for it to be negative. If I was like a random person, like coming in on this chart, I didn't know what it was, and I was just looking at this and I was saying, what are you going to do? If I was long, frankly, this would kind of be my level. This is my own personal opinion. It's got nothing to do with what you should do. But I would be like, damn, that is a damn good run. That's fantastic. This is critical. I would descale. Okay. That's the way I would think about it. And the main reason is because this is truly that level. We're getting back to pre kind of crash levels from 22. They only mentioned the word AI. I understand it's good business, but still, during crypto crash periods, it doesn't do as well theoretically. And I just think this is clearly past bubble stage of a rally, and it's entering into, it can go anywhere. So when you start talking about, I don't know if people have been saying this, but I'm assuming I saw some comments the other day. People were like, NVIDIA to $4,000, NVIDIA to $2,000. Well, I like hearing that. That's exactly what I want to hear near the end of something. So if I was looking at this, I would never short it with a futures contract or a CFD or short it like that. I mean, obviously it would be some kind of option, but we don't have the technical reason yet. There would be more of a gut instinct based on the current leveling. Okay. And then you look at it across the board. So you got to be very, very careful here. I mean, this is returned as of January. I'm sure it's going to make some people salty, 95%. So it's pretty wild. Ricky Thompson says oil was cut because demand is falling. Keep supply off the market, keeping prices high. You're not wrong, Ricky. But if you watch The Mandalorian, I feel sorry for you because, that's that new season. Does anyone like the new season, The Mandalorian here? Has anyone been watching it? Is it any good? NVIDIA is oversold at 5K easily. Thank you very much, boss. Appreciate that. I love the company. I have the NVIDIA Shield. By the way, NVIDIA Shield, AI upscaling. Beautiful. Love that. Instant 4K. Even if you have like Netflix 1080p, it's 4K, baby. All you need is NVIDIA. If you dislike The Mandalorian, I would suggest you try Andor. It's actually pretty damn good. So let's move back over to the US 500 and look at some of these critical levels. So we've got the point of all of this was most of those stocks are at very heavy levels or within a couple of percentage points here. So I feel like it's probably better to be neutral on the markets right now and come in with an open mind both ways. Could we break through new highs and go all the way to 43.50? Yeah, of course we could. Could we also sell off within the next 40 points, 30 points, or even here? It's possible. So, and it's actually very possible because of the synergies we have with the Russell and the Qs and all these things. So I think neutrality is the best way because we know the Fed balance sheet has moved back to the neutrality. We know that this is the kind of market that's going to get FOMO in it, and we've got 3 gaps in behind. So let's get the key levels for this week out of the way as we approach 20 minutes towards the market open. So first up, I really like 41.35 to 41.50, which comes into these closure points as being anything in here. I'm looking for signals towards the short end. Okay, that's just how I'm looking. Look, I don't know it's going to short there, but I'm looking. So if we end up finding a rally here early in the session for the S&P, I'm looking at this zone and I want to know how it hits it and how it reacts to it. More importantly, the reaction. Remember, I say patience, react, don't predict. I want to know what the reaction looks like here. And I mean, if you're going to go straight anything, you always need to protect yourself. Options is the best. Now, if we sell off, let's take a fib from this level here currently and pull it down. And let's now understand the 2-hour action that's going on in these markets. So we have 1, 2, 3 gaps that are all down here. Now, I know I'm making a big deal about the gaps, but it's actually pretty unusual to leave these alone for too long. Now, case in point of that would be to go and explain it using this point in the market, I believe. Was it that point? This one here. So this was a multitude of gaps. It was like gap, gap, gap. Markets just just got floored. And then we came back and we got them pretty quickly afterwards. Didn't take too long for it to come back and get them. So I tend to not see a triple gap hold for too long. It's kind of rare actually to see so many so close together. Double, sure. Triple, it's getting a bit more unusual. So we have an unusually weird gap kind of going on here. So if the market's turned right now, right here, where would they come back down to? Well, I think it's fair to think that 39.76 will be fairly heavily bought. We know that one of the most traded levels throughout all of these ranges of the last 6 months basically sits between 39 kind of 70 and 4K. There's a huge purchase. That's very neutral. So if you believe the markets are bullish, which is totally fair right now, then when markets come back down, you have to think there's buyers somewhere in these blocks. And again, you're looking for reaction. So at this stage, you would have to come in with an open mind to think, okay, well, we've got a low, we've got a high, we've got a lower low, we've got a higher high now. We're getting close in here. Usually markets can't bust this level too easily. They usually have to come up, stagnate before. This is a common bust technique where it stagnates before it pulls back, allowing big money to get back in and then slaps it through. So at this stage, that's kind of the thought process, and you're becoming more into anywhere in here and then moving forward. At least that's my leading theory on the markets at this stage. And again, open to being wrong. You always have to be. You have to be neutralized into this because it is a very, very precarious situation. We know we've got jobs numbers coming this week. We know that we're going into a long weekend. Now, historically, that's usually very bullish for markets. So markets are super bullish into these periods usually. Yeah, pretty big deal. So I think we're fast approaching keys. Let's have a look at Qs. Qs, I really want to see the market above 321.53, and I wouldn't mind it going into this kind of gap fill. So I think that's all key. And I'm going to put that on the screen so you can see it. There you go. So yeah, all of that coming up to that close there, I think all of this is super critical. And probably not enough people spot it, which is good because that's what you want to see. You want to see something other people don't spot as much. Critical level. And I'm watching the reaction around there. So I think today almost would be one of those days where I want to see structure formation in the morning. I want to see how this market forms. Once we get an idea of the structure, then we can get a bit of an idea of what they're thinking, and then we can go from there because we're at the point where it could go two ways. It could bust straight through, of course, unlikely, or it could start to consolidate here or even start to turn during the session. So I think that's a big one. We also going into a very, very seasonally strong period, which is generally that April period. Where have I got my stat for that? Sorry, so many stuff on the screen. I know it's in here somewhere. There it is. So this is the normal way that markets will trade, and they often come into April fairly strong, which I guess we did, and then we kind of start to go into like a sideways action if you take all of history into account. So I think this is the chance that if the markets are going to turn back to the downside, they should theoretically do something around here. Let's have a look at that technology one as well. The technology one again shows that kind of sideways action coming through the start of the April period. Well, guess where we were at? The start of April period. So yeah, that's sideways action. All right, let's have a look at some stocks. What do you guys like to look at here? Carl says the seasonality is kind of playing out on Tesla. Yeah, I don't know if I've proven Tesla's seasonality kind of thing. Yeah, for sure. I haven't really thought that would probably be correct. Let's do some dollar TA. Yep. So I've already done that for you. I actually think a dollar should buy here, like where we are right now. It got smashed through the session today, and it's come all the way back down to exactly where I'd like to see it find buyers. So yeah, dollar needs to find buyers pretty much right here, right now. If it's going to, technically it's at a good level. You have to, it probably fell a little bit too fast. It is I don't really like markets that just instantly smack a level. I mean, this just went brrr, bang. So I'd like to see some structure formation here, maybe something like that. And if that occurs, then yeah, I certainly think DXY should find the strength for the rest of the session. It's at that critical demand that it breached. It's at these kind of fib levels as well, which makes sense. But I'd like to see dollar find strength pretty much through the start of the US session. We're about 14 minutes off the open here. We've got 1,401 of you joining us. Thank you so much for joining us. Appreciate you coming out for a Monday open. It's a great time to be in Australia again. We're opening at 11:30 p.m. Thank goodness. It's a good time. So it's not 1 a.m. in the morning or whatever it is usually, 1:30. That's terrible. Let's have a look at some crypto. But yeah, dollar is smack on the levels that you'd want to see buyers. Let's have a look at the old gold as well. You can see here some markets, but let's have a look at gold. So gold's come back up to the most traded zone. So it's sold off, breached the trend line, and come back up. So again, it makes sense with the dollar because the dollar's at critical buy and gold's at critical short. So yeah, I mean they're both they're right in that zones where they should turn theoretically. This should turn to the down based on what we've got going on right now, and dollar should turn to the up. Now, I don't know that's going to happen, but statistically, they would be the kind of zones that I would expect here. They would be the zones. Let's talk about crypto. I'm actually interested in crypto again. I'm really, really interested to see how crypto deals with this situation. So does anyone here think this is actually distribution, or you think it's just going, or you think it's accumulation? Which one? Give it to me, chat. Tell me everyone. Is it distribution or is it accumulation? Mr. Credit Union 1. Mr. Credit Union, will you give me lots of credit in these trying times? Says, enjoying the Monday sessions. Thank you very much. Young Buck says, to be fair, Tom, dollar should be down way more after printing 40% supply during COVID. Young Buck, just remember though, one thing I will bring you back to. Didn't all the other currencies print money as well? Didn't they all weaken their economy during COVID as well? So I think all things being relative, which is the best? Look, not Australian dollar, I'll say you that. Hey, I'll take American dollars. You want to convert 1-to-1 with me? I'll take all the American dollars. Give them to me. More American dollars. I'll take all the Washingtons. And you can have whatever we've got on our currency. I don't even know sometimes. We have plastic. Give you plastic. RJ Hall says, answer 3, manipulation. George says, 500K BTC, baby. Moon time, clear accumulation. I like that. Stacey F says distribution over 30K. A few people saying accumulation. Dr. James G says, what are the best signs of accumulation versus distribution? It's a great question. You're usually trying to spot the steal, man. So you're usually trying to spot the steal. And I think today's maybe the critical point here for these markets, because this could be the steal. And what that means is it could be the UT. And if it is a UT, then we make a new low underneath here. And then we end up breaching through that. At that point, when most people are like, oh, it's a Wyckoff. See, I told you. The problem with Wyckoff or any of these accumulation distributions is you have to be able to spot them as they kind of are up the tops more to make maximum profits from them. Otherwise, you kind of get crappy ratios. Like you might get your 1-to-1. Well, it's not very exciting, is it? It's a bit boring, guys. 1-to-1 sucks. So I don't want 1-to-1. I want like 1 to a gazillion, or at least 4-to-1 or better. If possible, we can get 4-to-1. So yeah, these types of things often do spike it for you. Now, of course, it's all down to reading the storyline. If I was reading the storyline here right now, you could say, well, what about this one? This one takes out these lows, but I think this is key. So I have a feeling, like the way I look at this right now is looking negative. And I do have to think of negative, because even though it's against trend, so trend's up, I just don't like that. And I don't like how it reacted so far. To me, if the dollar does find strength here, this should theoretically weaken off, and it doesn't really make sense to be a hedge against this uncertainty in the world. I understand, taking it to the dollar and stuff, but I don't know if that many fund managers I know are actually accumulating Bitcoin. Could be wrong, but from the ones I have talked to, they're terrified of it. Man, and of course you could say, well, I love Bitcoin. I'm probably lover of the Bitcoin more than any of the other cryptos other than Ethereum. I also like Ethereum, but I'm old school. I don't even understand some of the other cryptos. I'm like, what is this? What is this rocket? I don't I don't know what it does, man. I don't know what it does because I don't really fall for the storylines. I just like the ones that have the OG kind of like either proof of work or at least they've got some brand name kind of thing going behind them. So at least I can see them as a store of value. They've got defined longevity. But I'm like kind of Buffett from that aspect. If you throw me a machine, like a new stock, and it's got less than 2 years of data on it, I don't care. And in fact, I've got a rule. If it hasn't been on the stock market for over 5 years, I tend to think it's trash. And I don't know if do you guys think that's a good rule? Would you like that rule? I mean, I can't really think of a company that other than maybe Tesla, that I wished I owned in the first 5 years. I'm sure there's some, and you could put them in the chat, but I can think of a hell of a lot of bad ones that would have been bad to own. Permit Fisher, $4.99. Thank you very much, Permit. Always a great supporter of the show. Appreciate it very much. Kevin says the Canadian government was printing a mountain of money. I could see it from Toronto. Yeah, that's true. And then Huge Park, thank you very much for the donation. 12,000, not American dollars, but thank you very much. Tom, as a non-US investor, if meltdown is expected, which one is better? TLT, SQQQ, gold, or just dollar as cash? Yeah, it's a good question. They've all got different risks. So you have to think, okay, well, if you think, I'm not saying meltdown, by the way, it's a big difference. I'm saying kind of like earnings compression. Okay, earnings compression. So SQQQ is obviously betting against American economy. Usually, I'm not a huge fan of taking that type of short unless you're really timing it, and that's not taking it with an option. So I'd say that's dangerous. Gold's probably had a great early run. So I think gold will kind of find a bit of lackluster returns maybe around here now. Everyone's on the gold train. And look, there's so many calls on it. So many calls on it. So I could see gold kind of stuttering for a while. So dollar is actually a very good concept, and TLT is okay, but only if you believe that treasuries, the US economy is actually really weakening, and that people will need treasuries. So I don't mind treasuries either. But yeah, unfortunately, the boring plays are some of the best at this stage. So Bitcoin certainly at these top ends. Let's quickly scroll down here. RJ Hall says SQQQ, you're at a huge disadvantage. Yeah, there's a lot of problems with it. If you look at it on a chart and you see what happens over time, it can be very brutal. So we've got 6 minutes here till the market opens. Markets are down. US 100 is down the most, down 0.72. Russell is holding at 11.11 up. Gold has made a great resurgence after getting slaughtered before. And let's look at the Dr. Copper. Dr. Copper is boring, sitting in the middle here. So it's really not doing anything cool. It's doing crap. Natural gas is trading around those secret lows that it's had recently. Very risky trade, so be careful there on the old natural gas. But technically, it's at an interesting point that we crapped on about for a while. So that's good. And yeah, dollar and gold are both at critical levels. So we'd like to see some stabilization here for the dollar to find bulls, and we'd like to see gold kind of find the weakness here, ideally. Treasuries are down 0.24 coming in. High yield bonds are down 0.57, so in line with the markets going down. High yield bonds also hit this little purple line. Not that it should matter, but basically that's where support becomes resistance. I would say also they probably fibbed to around a 61.8, yeah. So maybe this is, I don't really do analysis on HYG like this, but yeah, I mean, it's there. I just saw it and I thought, oh, well, might as well point it out. We haven't really seen the market going defensive in recent days any more than normal. So that's nothing new. Let's take a look at the international markets. DAX at highs. So again, usually you see a bit of consolidation before being able to bust such a key level. So it's not unexpected to find some weakness here. And there'll probably be some gaps there on that. XJO, strong day for the Australian market. Oh, man, I'm so used to talking about American market. So yeah, this is exactly where I expect some weakness to return for the XJO. So again, critical. We got critical Qs. We got critical Russell. We got critical DAXI. Probably the France 40. I don't know where the UK 100 is. Let's have a look. UK 100, the old FTSE for the any British people out here. Anyone watch the F1, by the way, on the weekend? Oh, Ferrari. My goodness. Ferrari, Ferrari, Ferrari. It was a shocker. Poor Ferrari. Well, actually, Alpine was pretty bad too. Let's go over here. I'm loving the F1 at the moment. I'm going to say I'm loving the F1. Let's move over to the UK 100. And is it a critical? Yeah, not really. I mean, it's kind of just in the middle of nowhere there, isn't it? It's had a nice rebound, some structure through here. So certainly this was a huge level before. Yeah, I guess it's a good supply zone. So this block here is pretty key. So again, another market kind of at that zone where you've had a nice run for a couple of weeks. I just suspect there's some weakness here. So today's lesson would be to look at the structure of the US 500 as it opens and try to find. I mean, I would like to see it actually tip up a little bit. I'd like to see it fill all these gaps in and then weaken off. So if we did this, well, then, yeah, I'm going to be short. Sebastian says, I wish Bottas was doing better. Yeah, he's doing really bad. That's an F1 driver, by the way. And F1 was a nut fest, three red flags. That's the Australian way. We just keep doing that. People saying they're doing some shopping. Yep. A lot of people wanting to know more about oil. Oil is at absolute resistance. US oil at the resistance. 3 minutes till the market opens. Thank you very much to the 1,410 people joining us. I do have a little bit of an announcement after the open happens. So if you want to, you can stick around for that. But it does pertain to the next month of this show and what's going to be happening moving forward. So hopefully I can you stick around. It's exciting news for me, but I also do want to let you know what's happening in the community because I do appreciate each and every one of you sitting here with a Monday for these hours and going through these charts. So US oil's at just absolutely the resistance level. And you can see it's no one else doesn't know this. A lot of people's stop losses will have been hunted through here and here. So that's why you're getting this kind of structure. You initially take it. Obviously, we could still take those highs. So you're going to probably need to protect here. I could see people trying to go short against the oil. It's probably not my favorite trade because it was mostly, market gapped up due to the OPEC stuff, but this tends to lag off. So what happens? Like, why would they cut this? Well, they see demand kind of going down and they go, I want to make more money. So let's quickly cut supply and then push the price back up. And just the market kind of just does this a lot of the time and then does that. So I'm not really hugely won over by it. I've seen it all. We've seen it all before, haven't we? Thank you very much, Deborah Smith. Appreciate it. 1 minute till this market comes in. So we've got the market going through here. So here we are. We are Windows 11. What the hell is this? Doesn't even work. Wait, what happened to my ticker clock? All right. Well, I don't know. I don't even know what Windows 11's doing. It's terrible. So that's unfortunate. I love Microsoft, but yeah, not too great. Our key levels again for anyone that's joining in. We've got the 4135, 4150. I really like this structural zone. I have put a line through this red area because that actually is a traded zone throughout this structure. So everything in here is critical, really. So many things like the Qs and stuff. I'd like to see them take those highs out, maybe find a rally early. That would be great. A rally early would be great, followed by a sell. That would probably really reiterate that the bears are sniffing around. We do have 3 gaps, so markets could pull back fairly deeply. I would suspect that because we breached this massive level, the 4080 level, we have to be kind of net on the long side at the moment. I'm very, very careful here, but net on the long side due to a mixture of seasonality and a mixture of where we are into earnings. Markets love a good bit of optimism into earnings, so that's going to be a big one. All right, here we go. We have opened the market. So ding, 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 ding. There we go. We've opened that market. And we're seeing mostly negatives from tech stocks. We're seeing probably a few other things that are of interest. Let's actually load up a heat map here. We'll come through. Oh, not that heat map. We don't want that one. US. Let's go over here to some sector stuff. And let's see what's percentage opening up and down. All right, so Tesla concept is the lowest. These are just concepts. They're not necessarily all sectors, but it's just interesting. So a little bit of tech down here in the morning. And on the upside, of course, no surprises. Gas, oil, gas, oil, fertilizers, that kind of thing. Fertilizer stocks are interesting. A few weeks ago, they were kind of getting beaten around, I think. I don't know how they're going at the moment, but yeah, fertilizer stocks are always an interesting pick. So it's green for pretty much all of the stuff. Let's open up the snakes and see where the snakes are at, which is the sectors. So we'll find out the major sectors here and we'll watch them all kind of run around at the start of the open. Can tell us sometimes the way that the market wants to run throughout the session. Remember, following the money is usually the better way of doing things. So we can do that by loading up all of our sectors. And not that I'm sponsored by them or anything, but I do find that the Coifin app is pretty good for this. So markets coming in, 0.3 up. Let's go to the 1 day. I'm just going to load up a whole bunch of oil, gas, solar. Of course, it breaks when I do this. Doesn't want me to show it to you guys. All right, here we go. So there we are. There's our snakes coming off. And you can see it's oil in front, energy sector, oil services sector doing incredibly well. I'm sure if we put this one on there as well, this will be doing great. So 4+%. What do we got down the bottom? So we've got communications, technology, and utilities finding some of the better sectors of last month, finding a bit of weakness. So it seems to be mostly the market's just kind of floating around oil. I'm not sure if they'll be able to like hold their gains. But yeah, that's where we're at here in terms of the sectors. Let's actually load the oil sector up and see where it's at, because if we load XLE and we go over here to XLE, you can see that it actually snapped into this high. So even if it does rally here, I think it's going to have some problems. So let's pull like a fib from the top. We'll pull one from here and you'll notice why. So you're getting that 61.8 plus you got that supply end that ended up breaking down. So I feel like oil's done. This is the so frustrating about the pre-market. The pre-market loves opening into the critical zones. So I can see kind of like an early rally here on oil, and then I still think that's a bit of a resistance breaker for it. So again, makes sense to where oil price is at this stage. Super critical, sitting on that zone. A lot of Wall Street hold Apple like we'd hold cash. That's true. It's considered often the safe tech. So people go into it pretty heavily and then jump into Apple and jump out of it. I mean, Kathy Wood would have been better holding all of those. Yeah. Remember when she was holding those like cash and then going into the other ones? So we're kind of looking for an early morning rally here. We'd like this. This makes more sense. Even the bear narrative, I know it makes no sense to some people, but generally you want to suck in the early. Remember, who trades the first hour? Retail love the first hour. Got my paycheck, guys. Let's go to the moon, baby. And then they push that thing up, and then they get smoked. So you'd like to see these markets actually rally up a little bit here. And again, I'm not even worried. I would like to see them go 41.35 to 41.50. There's nothing wrong with that. We're not quite at those super critical zones. The Qs, the S&P, I'd like to see a little bit higher. So a little bit higher before bearish, ideally. David says Nasdaq 100 melting up. Isn't it only up about 0.06%? Carl says, you spying on me or what, bro? Yeah, well, I know, Carl. I know. You get the paycheck. You go to Chick-fil-A on Saturday because it's not open on Sunday. See, that makes me American because I know that. I know that fact. You ask how many people from overseas know that Chick-fil-A is closed on a Sunday. They won't know, but I do. So there you go. It's not on the stock market either. Never will be. But I'll buy some shares in the Chick-fil-A. So that's the thing, though. You go buy the Chick-fil-A, then you then you eat pot ramen for the rest of the weekend, and then you come in Monday, all of it blown. First 10 minutes. Nasdaq week and open. Yeah, it's come in 0.53. So Nasdaq, again, I would like to see it spike the highs. S&P is going to be run by the oil today, so it's the oil show. But yeah, I'd like to see these things get into that 41.35, 41.50 zone. And then I really want to see a reaction there. Chick-fil-A is open on Sundays in Canada, eh? Chick-fil-A is getting into Europe. Really? I knew they'd do that eventually. Quillow, $10. Thank you very much. Wishing you well. Make a wish, Tom. Happy Easter. Thank you very much, Quillow. Always appreciate your support very much. The Monday Chick-fil-A pump. That's right. John says, my kids know. There you go. Thank you, Quillow. So I do have a bit of an announcement here. And look, I usually don't bring in personal stuff into it, but I did need to tell everybody here, and I'll be announcing it on the main show. So I guess I'm blessed enough to, to be becoming most likely a father in a few weeks. So that will mean that I'll have to make some adjustments for probably the first couple of weeks to month. And it may mean that the live show, although I'll be doing it next week, unless there's some announcement I have to make, it may mean that the live shows will have to take a bit of a back seat for about a month. So I do apologize. I will keep the daily show going. I am committed to doing it. So I will basically hit every day. I don't see myself not hitting it. I put the things in place so I can do that. But yeah, I just need to let you know that unfortunately, unfortunately, I won't be able to necessarily do as many sessions. So yeah, the Monday stream may suffer for a month, but don't worry, I'll be back. I'll be making announcements on Twitter, so follow us there. But yeah, it's exciting news for me. Obviously, thank you very much for all your well wishes. And I'm sure I'll be going into, I'm already used to sleepless nights because of the US market. So that's going to be okay. It's going to be okay. But yeah, thanks guys. And that will mean that probably as of next week, we'll do a bit of a special show. And then it might be a few weeks off and then we'll come back. But yeah, look, we're committed to the channel. Obviously, I'm super committed to everything we've built here as a community. But I do also know that you have to, sometimes family comes first. So you've got to do that. And while I've always pushed the envelope here and doing these streams at wild hours, I don't know if I'll be able to. So yeah, thank you very much. I appreciate all those well wishes, guys. Thank you very much. Huge Park, 10,000. Thank you very much. Super sticker. Appreciate it. So yeah, the daily shows will stay. I will announce. Just follow on Twitter. Follow on Twitter. Follow on Twitter. If there's anything I miss, there'll be a good reason for it. I just want you to know that. But I will hit most days. I just do not foresee. I put in procedures to make sure that we get this done. So yes, exciting news, scary news, because trying to run these. The YouTube algorithm ain't going to wait for anyone. Just believe me on that one. If you ever want to get into this game, I'll say this. This is what you have to do. You have to produce every single day, okay? And take no more than 1 to 2 days off ever, okay? And that's your commitment to this thing. And if you don't love it, you're going to burn out. That's just the truth. And that's the same with trading. You have to kind of love it. Now, if you do find burnout, I'll give you a hint. All right, I'll give you a hint for the end of today. I strongly suggest that you consider setting way more alerts. There's no reason to be sitting here at every minute of the day checking out things. Find your levels. If your level is here, let's say your level is on this orange line. You don't care unless, well, it should be a little bit higher. There you go. So you don't care unless it hits there. So if you don't care unless it hits there, set the alert. Go about your day. Enjoy time. Do whatever you need to do because you don't have to be there. Until it hits your level, there's no reason to be there. And you can just periodically check it throughout the day, once every couple of hours. Don't be a slave to the charts. You'll burn out hard. I did it when I first started. I did like 16, 17-hour days. I burn out massive. So that's going to be a big component. And I think sticking in the game is all about longevity, being able to have that patience, react, not necessarily YOLO. You can lose everything so quickly in this game. So you don't want to be YOLOing. And yeah, I mean, YOLOing works for a little period. If you always if you're going to YOLO, be buyer, don't be a seller. YOLOing is much better for buyers than sellers. But I wouldn't suggest YOLO. I think it's just a poor play. So we need to make sure that. Scotty says, I think most that's day traders' biggest mistake, trying to make their money daily. Yeah, no, unfortunately it's the mentality of what happens when you're on the line or you really want to make something happen. And you think about any sports athlete, they work out every day, but they don't work out 17 hours of the day. They work out for like 2, 3, 4 hours, maybe max, maybe 2, maybe 1.5. I don't even know. And then they sit there thinking about mental game like 80% of the time. So remember the famous quote: a great hockey player looks at where the puck is, and an amazing God hockey player looks at where the puck is going to be in the future. That's not exactly the quote, but I paraphrased it. They see the future. They're looking in the future. They're like, oh, it's going to be over there based on the angle, trajectory, speed. And they're going over there, and everyone else is already, they're way in front. So it's the same thing. You've got to stick to it. So yeah, that's a big one. People are bringing up the VIX. Let's just quickly bring that VIX into the discussion point here. Some good stuff discussed in today's show. So hopefully you found that enjoyable. Obviously, we're not finding but look, we're on the precipice of critical levels here for markets. So we know that the market should be kind of finding this bull in the morning and ideally find some bear maybe later in the session into tomorrow. So the VIX sitting at 20, that's very much consistent with a market that's lost its fear. So now we've got the greedy market again. And if the greedy market keeps coming down, I've always said 16.37 is a key level for me and something I will be looking at. Do also remember options this week if you're looking at the options market, although it doesn't matter as much because it's, small week. We do have a lot of like these 400 pluses. So 406, 408, 410s. So we've got a lot of that. Not likely the market's going to want to go through that zone this week. Not impossible, but not likely. And the market also won't want to drop too much underneath 396, 394, 390, that zone. So basically we should stick within this zone. And if we kind of find bulls early in the session or early in the week, it should push through to bearishness later, which is why I kind of favor the bull early into bearishness. It makes more sense. I'd like to see that. What software do you use to draw on your screen while taking? I tried WinZip, but it seemed bad. Looking for a better one like you and other people use on the internet. Been wanting to ask this. Epic Pen is one of the drawing tools. You can also use your TradingView tool as well. And there's a few others. All right, guys. Well, from everyone here at FX Evolution, I'd like to say a big thank you to obviously joining us here through the session. Thank you very much to the almost 1,500 people concurrently that were coming through. We've, of course, seen the market open. We know that we're at very close to critical levels. I'd like to see the S&P make a new high here, start slapping into that 4130 kind of zone to 4150, that area, 3550. And somewhere in there, I'd like to see some resistance being met. So be careful. The markets are very bullish at the moment, but we've started to see some signs that could point this market down. And they're going to be things like that thing that I shared on Twitter, which is obviously a bit more of the taper, people feeling YOLO. But to go against that would be, we don't really have this switched yet. It'll be interesting to see how that looks this week. So I like to always go with, I'm looking for 28% bullish, ideally on this plus, and I'm looking for kind of like the under 40 for sure, more on the 36s for the bearish side, the 38s. And if we get that kind of thing, you can see the averages down here, then you usually know that the FOMO is real and markets are allowed to do the downturn at that point. Yeah, it just doesn't seem to happen before those things. So thank you so much for watching today. Good luck out there. I'd like to see markets, as I said, go up a little, then down. And I think we're approaching really critical points. Be careful on the BitNoodle Bitcoin. This is super, super level for it. If it does break out, though, you have to expect, again, at that point going towards that 30,200. And 30K is in the books, I think, at that point, if we end up snapping that. There's not many hundreds after that anyway. So at this stage, I'm probably more bearish than bullish here just because of this candle, but it's mostly this candle and the structural formation that happened afterwards. I don't really want it too much above here, and obviously above here, well, that'd be a bit of a disaster. But if you wanted to just chill and wait, if it did that, oh yeah, that'll be a wyckoff at that point, you're more likely to say, okay, this is a Wyckoff distribution. Let's go. Good luck. Thanks so much. And I'll leave it with this BitConnect. Thanks very much, Gary. I love that, man. But BitConnect was the best scam in the crypto market because it was so hilarious when that guy was like, and the poor dude, did you ever see the follow-up interview? He's like, I didn't even know what was going on. All right. Kevin says, pro tip, Tom, don't name your child BitConnect. That's true. All right. Thanks, everybody. Catch you for now. And we'll see you next Monday for Easter Monday. Easter Monday. Let me just quickly check. Markets open Easter Monday. I always forget. We'll do a stream anyway, but let's have a look. We'll do it for Tuesday if we have to. Can't remember if the US market's open. Guys, tell me. Why have I forgotten? I think it's this year will remain open instead and close at noon on Good Friday for the bonds market. Stock market will open Easter Monday. The short answer is yes. Hell yeah, next Monday. All right. Good Friday's closed. Yeah, short. I don't even know what the hell that thing said. Not just Good Friday, good month, and good quarter close as well. No, that's true. Yeah, the months were big. Should be open Friday closed. All right, well, we'll confirm, but I'm going to say with Monday, we're going. All right. Thanks so much, everybody. Have a great Easter in between if you're not tuning into the daily show. Thanks so much as always. Click the link tree if you're interested in some of the links and stuff that we do, and we'll see you next time. Bye for now.